Hello, this is Raul de la Vega with your mortgage rate update. Mortgage rates this week went up just a little bit since last week. The 30-year national average was 0.001 different from last week. And this is keeping affordability still in focus for current home buyers wanting to make a move and current home purchasers who are looking for their first home. The 30-year fixed mortgage average increased from 6.6% from 6.5% last Friday, while the 15-year fixed increased to 6.0 from 5.9 last Friday. This is averages across America. Another major story this week is that the Federal Reserve held the interest rates tight for its July meeting and did not move them at all. And instead of making interest rates better, it seemed to keep them the same at the same levels of last week, even though we had good news from the Fed chair. Even with the Fed not moving, it left mortgage rates unimproved, which shows that inflation concerns leaves the bond market and overall economic uncertainty a little worrisome, because it's still making a major role in mortgage pricing. For buyers, this remains that affordability is the challenge at hand. Even a tiny little increase right now is really affecting buyers' debt-to-income ratios, their buying power, and their current monthly payments, which they will be having in the future. This has also reinforced that government-backed loans right now have a bigger disparity than normal from conventional loans. So right now, people are opting to get FHA loans with higher mortgage insurance because the interest rate difference between the conventional loan and the FHA loan are very wide apart, unless a person is putting 20% down payment. Right now, VA and FHA current interest rates are much more competitive, and the difference between conventional rates is much higher than normal. That spread between the two is probably more than a half a point, and that's a lot more than usual. The overall takeaway from this last week is that interest rates are holding high. They are at their 1-year high, and they're holding steady. Right now, it's a great time to negotiate 3-2-1 buy downs, 2-1 buy downs, or at least a 1-year buy down for clients, because that disparity in interest rates from 3 weeks ago is a big difference in payments. This is Raul de la Vega with your mortgage rate update, Patriot Home Loans. Talk to you later. Peace.